I put on a few trades last week, and one of them was, I just did one of them Friday. I watched Kraft had a really bad earnings report, symbol KHC, the same day Bob Kraft gets picked up for soliciting prostitution. So not a good day for him. Someone's always having a worse day than you, right? But I noticed that Kellogg, which not very fun, sexy stock to trade, but Kellogg and General Mills, and I specifically am in Kellogg right now, Kellogg had earnings a week or so ago, or a couple weeks ago, and it was not that great, but the market went down and then blew it off and came back up. So the market, in my mind, kind of decided that Kellogg at 40% off the highs, 4% dividend, and near its 200-month moving average might be kind of bottoming out here. So that happened, and then Kraft has the meltdown, which is more specific to Kraft and all their old brands and the acquisitions they didn't make and things like that. But they took Kellogg down with Kraft. So to me, that shouldn't happen. So I bought Kellogg. That's a trade I'm in right now. And I'm going to risk under 55. And I think that stock has potential to have a decent move up if it's down on stupid news of Kraft going down. So this is an example of a trade that I like to do a lot when there's things priced relative to other things, which the market has kind of made a decision on. And then all of a sudden they're moving because something else is moving that doesn't really add up. So that's one thing I did. And I am in Bitcoin and gold. I have been in those for a little bit now. Bitcoin is just starting to work out. Gold is working out a little bit. I think the common wisdom on gold here is that it's breaking down from the dollar. So that's why I'm in the trade. I love correlations that don't work. So gold usually moves the opposite of the dollar. And right now you've had the dollar's been weak maybe for a few days, but generally speaking, the dollar's been strong. And gold hasn't been weak. Gold has been moving up with the dollar. And I think something's changing. And there's also this backdrop of all this reckless fiscal stuff going on in the U.S. And from an absolute and a relative standpoint, our debt is way out of whack. And that's been talked about for 10 years. So it's not like that's easy to trade on. You can get caught up in that financial entertainment stuff and it doesn't help you make any money. But knowing that's in the background, it may come into play here if these relationships break down and gold keeps moving up with the dollar. In my experience, when a correlation that's long held breaks down, it creates a big move. So it's a little extended right now, but I think that's something to keep an eye on. And I don't know if these internet coins are going to be acting the same way, if they're too new for me to know. But I noticed that they are after having so much negative news priced into them and just getting beat down to nothing and coiling on a weekly chart, those are looking like better bets down here. And I noticed that they have some catalysts in front of them, like a potential Bitcoin ETF that could happen. There's a possibility that we get some use case movement where there's a reason for these things besides just gambling online and trading them. So we'll see. I've been reading some stuff about that. Jack Dorsey of Square and Twitter has been talking a lot about it in the last few weeks. So this one is not rock solid, but it's kind of, I have a feeling and I like the risk reward type of a trade. But I like the Kellogg one better in terms of having a good reason. Anyways, that's just some stuff I was looking at this week.